So, you've probably seen the name Circle popping up everywhere in financial news lately. For a long time, people just thought of it as a crypto company. But after a truly spectacular debut on Wall Street, it's now a serious heavyweight. So what exactly is Circle? And what's the secret sauce behind its incredible arrival on the big stage? Let's get into it. All right, this number right here, this is what made everyone snap to attention. When Circle had its IPO back in June of 2025, its stock didn't just do well, it absolutely exploded. We're talking a 247% jump in just 2 days. I mean, a debut like that immediately makes you ask, what on earth is powering this company?
And really, it all comes down to this simple but incredibly powerful idea from their CEO, Jeremy Allaire. See, this isn't about just creating another payment app. No, this is about fundamentally rebuilding the plumbing of money itself, but for the internet. It's a huge mission they've been on since way back in 2013.
So that really tees up the big question we're digging into today. How does a company that came from the wild world of crypto become an absolute darling of Wall Street? Well, the answer lies in a product that brilliantly connects those two, often very separate worlds.
Okay, so first things first, we got to talk about the core of Circle's entire empire, a product called USDC. You've probably seen those 4 letters floating around, but what a lot of people don't get is the sheer scale and power behind this digital dollar. It is the engine driving pretty much everything the company does.
So what is USDC exactly? Well, it's a special kind of crypto called a stablecoin. And the name really says it all. Unlike Bitcoin, which can have these wild price swings, a stablecoin is built to hold a steady value. In this case, 1 USDC is always meant to be redeemable for $1. Just think of it as digital cash. Simple as that. And when I say digital cash, I mean, we are talking about a massive, massive scale. By the end of last year, there was over $75 billion worth of USDC out there in the world. To put that into perspective for you, that's bigger than the entire market cap of some pretty well-known public companies. This thing is way beyond some niche crypto experiment.
But, it's not just the size, it's the speed of the growth that's just staggering. That $75 billion number, that was a 72% jump in circulation in just a single year. That's not just money sitting around. That's a huge signal of incredibly fast, real-world adoption by businesses and people.
And all that adoption? It leads to some absolutely jaw-dropping numbers. In just 1 quarter, nearly $12 trillion moved across the internet using USDC. Now here's the key thing to get. People aren't just buying and holding this stuff. They are using it for payments, for trading, for sending money all over the globe, and they're doing it at an incredible scale. And what does all that activity add up to? Well, this. Circle has just completely captured a huge chunk of the market. According to Visa's own analysis, USDC is now responsible for almost half of all stablecoin transaction volume on the planet. I mean, we've moved past growth here. This is market dominance.
Okay, so this probably brings up a pretty obvious question in your mind. If 1 USDC is always worth $1, how in the world does Circle make any money? It's a great question, and the business model is actually both incredibly simple and, well, incredibly powerful.
Okay, so here's how it works. When someone wants USDC, they send Circle actual US dollars. Circle then creates or mints the same amount in digital tokens. But, and this is the crucial part, Circle doesn't just let those billions of dollars sit in a checking account. They hold those reserves in super safe assets, mainly cash and short-term US government bonds. And they earn interest on that enormous pile of money.
And trust me, that interest really adds up. In just the last 3 months of 2025, Circle pulled in $770 million in revenue, and most of that came from interest. Now, for Wall Street, this is music to their ears. It's not some crazy, complex crypto thing they can't understand. It's a simple, profitable, cash-generating business model.
Now, if you break down their revenue, you basically see the story of Circle's past and its future. The huge bar, that's the reserve income. That's the engine that got them here. But see that smaller bar, the one labeled other revenue? That's where the bigger vision is. It's only $37 million for now, but it's growing fast, and it shows that Circle is building a business that goes way beyond just its star product.
Because look, the real story here, the thing you have to understand, is that Circle is using the runaway success of USDC to build something way, way bigger. They're not just a stablecoin company. They're trying to build a whole financial platform, an operating system for finance on the internet. And this is where things get really, really interesting. So, think of USDC as the foundation. On top of that, they're building this whole ecosystem.
They've got their own super fast blockchain called Arc. They built a payments network to bring big financial players on board. They created this amazing tech called CCTP, which basically lets USDC jump between different blockchains seamlessly. And they're even expanding into other currencies, like a euro stablecoin and tokenized investment funds. Every single piece is designed to make digital money more and more useful.
And we're not just talking a little bit faster. This new infrastructure is insanely fast. Their Arc blockchain can finalize a transaction in half a second. Half a second. Compare that to the old-school banking system, where it can take days for money to actually settle. For institutional finance, a jump in speed like that is a total game changer.
And it's not just theory, people are actually using this stuff. The Circle Payments Network already has 55 major financial institutions signed up. But here's the wild part. That number almost doubled in just 1 quarter. It just shows you how hungry the traditional finance world is for this kind of technology.
Think of it like this. They built the new financial highways, and now the traffic is just immense. Their cross-chain transfer protocol, that CCTP thing I mentioned, it handled over $41 billion in a single quarter. It's become absolutely essential plumbing for the entire crypto economy, and Circle is sitting right in the middle of it all.
Okay, so Circle has this killer product, a fast-growing ecosystem, but they are not the only ones in this game, not by a long shot. Which brings us to the competitive landscape, or what I like to call the great stablecoin race. Before we even get into the different players, we have to understand why this race is happening in the first place. I mean, just look at the comparison. The traditional banking system takes days to settle. It shuts down on nights and weekends. It's a clunky mess. Stablecoin tech? It settles in seconds, it runs 24/7, and it works anywhere in the world. It's just a fundamental upgrade to how money moves.
And inside that race, Circle has picked a very, very specific lane: regulation and transparency. You look at their main crypto rival, Tether, which is offshore and a lot less clear about its reserves. Then you look at banks like JP Morgan, which are building their own coins, but they're closed systems just for them. Circle's strategy is completely different. They're a public, US-regulated, fully audited company. Their entire bet is on being the most trusted player in the game.
And you know what? That trust-first strategy, it is turning out to be an absolute masterstroke. For years, so much of the crypto world was terrified of government regulation. For Circle, it's actually their biggest advantage. New US laws like the Genius Act are creating clear rules of the road for stablecoins, and that's a massive tailwind. It makes the whole space legitimate, and it puts companies like Circle, who've been playing by the rules all along, in the perfect position.
And all of this brings us to one final really big question. As you see tech companies like Circle building this new internet-native financial system from the ground up, and at the same time you see the traditional giants like JP Morgan trying to build their own versions, you have to wonder, is the future of money going to be built by tech companies moving into finance, or by the old guard banks trying to become tech companies? Circle's incredible rise suggests that battle is just getting started.